Hello, hello, hello. Good morning, everybody. Welcome. It is actually September, which is kind of crazy. We're 3/4 of the way done through the year, and it's just kind of blowing my mind right now. So, welcome, everybody. Joining me today is Bill Plaugher with Luna's Bookkeeping and Tax, and this will be the final installment for the month of accounting and talking to accountants and stuff. We've already got September all planned up. It's going to be about the future. We're going to talk about long-term care. We're going to talk about, getting a cemetery plot. We're going to have a bunch of people like that getting on. So a little bit about Bill that I know. Absolutely amazing accountant, bookkeeper, all of that kind of stuff. Just does some amazing work. Very, very open to conversations. We'll talk to anybody and give some helpful advice. So everyone help me welcome Mr. Bill.
Well, hello, everyone. As BK warmly introduced me, my name is Bill Plaugher, owner and partner of Luna's Accounting and Tax. Today, I'd like to talk a little bit about our, tax planning, and I'm going to focus mostly on the main home buyer and or real estate investor. Tax planning and the tax ramifications of buying a new home are both very important things to consider.
I agree. Before we get there, Bill, though, you do have to answer my very favorite question, which is you have to tell us something not a lot of people know about you.
Well, I used to be a snow ski racer and ski instructor once upon a time in a galaxy far, far away. So those are things that not a lot of people know about me.
I love it. So what do not a lot of people know about their home and real estate investing?
Well, so I'll break it down into the two types. The first one being your main home buyer. I would say without a doubt, the number one question that I am asked when someone buys a new home and they sit down to prepare their taxes with me, the first question is, I bought a home this year. How does that affect my taxes? Short answer is, it does not affect your taxes to buy a home. When you sell it is whenever it will make a difference. Part of tax planning for your home buyer, you're going to want to consider basis or how much the home costs. You definitely want to keep really good records because the sale is where it's going to be really important to have all of that, because we want to show any upgrades that you put into your home. We want to show any value that you've added, any repairs, all of the expenses that go into the home that increase the value of the home are now added to what the IRS calls the basis or the beginning value. There's also this thing the IRS calculates called depreciation. The easiest way to explain that is normal wear and tear of someone's property or possessions. So however long you've had it is going to be how much depreciation or normal wear and tear they reduce that basis by. And then whenever you sell it, anything you make over your basis is considered profit, and that becomes taxable. Well, there is an exclusion that you can use once every 5 years, and you are able to exclude up to $250,000 worth of profit per spouse. So that could potentially be $500,000 of profit for selling your main home that you do not have to pay taxes on. Qualifications to qualify for that exclusion. The very first thing is, have you owned the property for more than 2 years? The answer is yes. Then the second thing we have to figure out is, did you live there 2 out of the last 5 years? Number 3 is, have you used this exclusion in the last 5 years? And if you have not used it in the last 5 years, you've lived there 2 out of the last 5, you've owned, obviously you've already owned it more than 2 years, then we have the ability to either figure out the prorate based off of the amount of months that you lived there out of the 2 out of the 5 years, or you get the full exclusion, and that's $250 per spouse, up to $500 to exclude for that tax return. So it's really good to know that, but record keeping is absolutely the most important piece of all of this. We recommend everybody scan your paper, keep it on cloud storage. There are a lot of secure storages that are really inexpensive. Safe deposit box at the bank works. 2 copies, keep one in your safe at home, one at the bank. We go the extra step, we keep it on the cloud as well. I recommend that for everyone.
So, Bill, I have a question for you then. You seem very knowledgeable about this stuff, but how does one go about vetting a tax preparer? I mean, can't we just go down the block and get this stuff done?
Well, that is a very good question, BK. So vetting a tax preparer is very important. Literally everyone watching this video, I could have you preparing taxes legally within 15 minutes. All we have to do is apply for your P10 or your practitioner ID number so that you can prepare taxes for the IRS. Now, they have proven nothing to any type of an organization, so there's no regulation on that type of a preparer. The next step up would be an enrolled agent, which is an IRS license. The IRS, basically, it's the highest license the IRS issues. It makes you a tax expert in their eyes. The third type of tax preparer would be a CPA, or a certified professional accountant, and that is a state regulated license, the same as a tax lawyer or a JD. In the eyes of the IRS, all 3 of those are tax experts, and they have all proven their knowledge in their field. Now, an enrolled agent, their field is tax. A CPA is an accountant, and it's a really broad canvas. They have a lot of things they can focus on. There's literally a place for a CPA to just be a retirement planner, and amongst other things. And then your lawyer, the only difference with a tax lawyer is they can go to court and present in front of a judge. As far as representing anyone to the IRS, all 3 of those licenses can call them with a power of attorney. IRS will discuss your personal stuff with us. We can do negotiations, offers and compromise, and or just decipher the legal language in a letter if you may receive one from the IRS. But vetting, you always ask, are you a licensed tax preparer? And the answer is yes or no. And then which type of license do you have? And then whenever if you're looking for a CPA, they usually charge a lot more because there's a lot more restrictions on them because of the state regulations. So their prices are usually in the neighborhood of the legal pricing.
Okay. So one of the questions that popped up in the chat that I wanted to ask you is, what if, which one of those 4 options would help if we were to get audited?
So the 3 licenses that have the ability to speak to the IRS on your behalf, if you give them power of attorney, or it's a form 2848, the IRS will discuss with either an enrolled agent, they will discuss with a CPA, and they will discuss with a JD. They will not discuss anything with the original tax preparer unless they are listed as the designee on the tax return, and they can show up to an audit with you. Typically, I would highly recommend going with someone with a license that has experience in representation. And, even out of those 3 licensed professionals, there's a small percentage of those that actually do representation. I think I'm one of those people that loves the gluttony or the punishment of speaking with the IRS. So I do resolution with the IRS, but not a lot of people will because it is time consuming and the IRS typically is not in a hurry.
Okay. That's awesome. I was going to ask if you were one, so I'm glad that you already answered that for me. I want to shift gears just a little bit, and I want to know, what should people consider when they're looking to become real estate investors?
So to become a real estate investor, sometimes it's as simple as I own a home, I meet someone, I get married, they own a home, we now have 2 homes. Well, the first planning would be, what do you want to do with both homes? Which one do you want to live in? What do you want to do with the second one? You can sell it and try and get the exclusion. You can convert it to a rental, or you can throw some money in it, remodel it, and what they call a fix and flip. No matter which one of those you go with, I recommend going with someone that can do tax planning. And like I say, like not everybody is in planning. A lot of those tax preparers are in compliance only. So they prepare your taxes, they tell you how it affects you, but running the calculations and seeing what the income is going to be, running a tax plan for an entity structure, because essentially if you decide to rent it, you become a business. So you now have, schedule your passive income from a rental. There are multiple things that you would want to look at very first in the very first planning, and that's going to be your entity structure. So what you're trying to gain from, or what you will gain from that tax planning, is how do I maximize my tax, or how do I minimize my tax liability? So what's my best tax scenario I can be in? The second thing is, how do I minimize my liability? Because anytime you have a business, you have some liability. There are definitely entities and structures out there that help protect. Some of those are state level, some of them are federal. And what we do is, when I do a tax plan, I will, interview you, find out, hey, what do you want to do? What is your scenario? Are you wanting to buy a rental? Are you wanting to convert a home you already own into a rental? Are you going to fix and flip? Or do you want to actually not do residential and go into commercial real estate? So that would make a difference as well. But the main thing is, legally minimize your tax liability. You want to maximize your income, essentially, minimize that liability. And then the other thing is, some of the structures are flexible in the future and some are not. So that is another thing that we take into consideration of, well, how long do you want to have this home? How long do you want to keep it as a business? Is this your retirement plan? These are all questions that we can glean out of tax planning and running these projections for you. But you really want to start with your best structure that's going to be flexible for your goals, or is going to provide your goals as, in the best situation. And, a few of the things that are super important with that, is it a good idea to have the property owned by the business or inside the business as such? What tax scenarios are you going to have with like the different types of entities? What retirement planning options come with those entities, because each one of them has a different set of rules on how much you can retire, what retirement plans you can do. And then the other thing is, are you interested in getting healthcare out of the business? Because there's only certain ways you can do that with some of the entities, and that may or may not be part of it. That's, why we vet you, ask you your goals. Are you an employee that already has healthcare, and, is that going to be part of the planning or not? But those are all very, very important things to do whenever you're starting your business. And once you've decided which way you want to go, now you need to register and get everything squared away, and then prepare taxes in the future.
I love that. Thank you. So I know, Bill, you've, in your words, you've given us a 10,000-foot overview. We're standing at the top of the cliff. We didn't dive into a lot of the nitty gritty. So if people are interested in diving into the nitty gritty with you, I know it's been scrolling at the bottom of the screen, but I have a lot of audio only listeners. Can you please tell us where folks can get a hold of you if they are interested in learning more and diving into more of the details of that?
So the best way would be to call us. The phone number is 720-531-2141. Again, that's 720-531-2141. My email is bill@lunastax.com. Our website is lunastax.com. You can reach out to us in any one of those methods.
Absolutely fantastic. Thank you so much for your time. It was very informative, and I very much appreciate it, sir.
Not a problem. And we're always happy to, speak with people and kind of get an idea what you're looking for, and, what you would like to plan for. Because, an ounce of planning is way better than reaction.
Absolutely.
I will plan for people all day if I don't have to call the IRS and respond to something that's already happened.
Absolutely. It makes a lot more sense and makes everybody's life easier.
For certain.
Well, thank you guys for tuning in today. I appreciate it. As always, if you know anybody, rates are still low, just like they were last week and the week before that. If you know anybody who's looking to purchase or refinance, send them my way. I can give them a screaming deal. We'll take really good care of them. And yeah, thank you so much, guys. If you have a topic that you'd like for me to cover, I've kind of got September and October planned. So I'm actually a month or two ahead, and I'm really excited about that. But that doesn't mean I have an idea for November yet. So let me know what you think would be interesting for me to talk about in November, and any guests that you'd like for me to interview. You can feel free to leave them in the comments below. Thanks, guys.